Think Florida's real estate is still booming? Behind the beautiful palm trees and pastel homes, a massive financial disaster is unfolding. Several cities are heading straight for a catastrophic housing crash, and the warning signs are literally everywhere. Prices are dropping, insurance costs are violently exploding, and inventory is piling up. This isn't just a tiny dip, it's a full-on shakeup.
Think Florida's real estate is booming? Not for long. Behind the palm trees and pastel homes, some cities are heading straight for a housing crash in 2025. And the warning signs are everywhere. Prices are dropping, insurance costs are exploding, and inventory is piling up fast. Is your city about to take a nosedive? Could that dream home turn into a financial nightmare? Stick around as we count down the 10 Florida cities where the housing market is cracking wide open. This isn't just a dip. It's a full-on shakeup that could flip the entire Sunshine State upside down. A dreamy beachside city that suddenly hit some real estate turbulence. If you thought this sunny paradise was immune to housing crashes, think again. In 2025, Fort Lauderdale is flashing red warning lights on every housing radar. Why? Let's break it down like you're chatting with your smartest real estate buddy over coffee. First, let's talk inventory explosion. The number of homes on the market in Fort Lauderdale has jumped by over 80% year over year, according to regional MLS data. That's not just a bump, it's a flood. Listings that used to be snapped up in weeks are now sitting stale for months. Homes that sold for $650,000 in 2023 are now struggling to attract offers at $580,000. But wait, it gets juicier. One of the most overlooked culprits behind the crash is skyrocketing homeowners insurance. Florida in general is hurting, but Fort Lauderdale is especially hard hit due to its coastal risk. Insurance premiums have increased by more than 50% in just 2 years, with many homeowners now paying upwards of $7,000 a year. Yikes! Add in ballooning HOA fees, some topping $500 a month, and buyers are backing off fast. Investors? They're fleeing too. During the 2022 to 2024 frenzy, investors were buying up condos like candy. But in 2025, many of those same units are underwater, literally and financially. A recent report showed that 30% of investment properties purchased during the boom are now listed below their original purchase price. Even Airbnb hosts are feeling the squeeze, with tourism dipping and occupancy rates down nearly 12% from 2023. So what do you get when you mix rising costs, falling demand, and too many listings? A textbook housing correction. Fort Lauderdale might still look like a $1 million postcard, but behind the palm trees, the market is wobbling. AKA the waterfront wonderland, has over 400 miles of canals, but in 2025, the housing market here feels more like a sinking ship than a dreamboat. What was once one of Florida's hottest relocation spots is now facing one of the biggest market cooldowns. And the data? It's enough to make any real estate investor sweat. Let's start with home prices. During the pandemic boom, median home values skyrocketed by over 60% in just 2 years. By 2023, the average home in Cape Coral was flirting with $425,000. Fast forward to 2025, and prices are down 5 to 7% year over year, with many homes sitting on the market for 70+ days. So what's going wrong? First, overbuilding. Developers couldn't pour concrete fast enough in 2021 to 2023, and now Cape Coral is flooded with new construction. Inventory has surged to nearly 4,000 active listings, up from about 1,800 in 2023. That's more than double in just 3 years. Second, insurance costs are crushing affordability. Because the city sits in a flood-prone area, insurance premiums have soared. Homeowners near canals and the Gulf now face $8,000 to $12,000 annually in flood and property insurance combined. Some insurers have even pulled out entirely, making new policies difficult to secure. Then there's the utility crisis. Cape Coral has one of Florida's most expensive utility expansion fees. New homeowners in areas undergoing utility hookups must pay over $30,000 in assessments, which has become a major deal breaker for buyers. Add in rising mortgage rates, and many locals are simply priced out. Wages haven't kept up, and the city's economy, largely reliant on construction, tourism, and retirees, isn't growing fast enough to sustain the real estate boom. Cape Coral is still a postcard-perfect place, but the housing market in 2025? It's more of a cautionary tale than a real estate fantasy. You might know Ocala as Florida's horse capital, but in 2025, this once quiet, affordable gem is galloping headfirst into a housing market slowdown. At first glance, Ocala feels immune. Lush pastures, charming downtown, and no coastline to battle hurricanes, right? But don't let the serenity fool you. Ocala's market is wobbling hard. Ocala had around 800 active listings in early 2022. Fast forward to now, and that number has exploded to almost 3,000. That's a 275% increase in available homes. And with supply far outweighing demand, prices are starting to dip. Homes that were listed for $310,000 last year are now priced at $275,000 and still sitting for weeks. According to Redfin, the average time on market has jumped to 56 days, up from just 19 days 2 years ago. One of the key drivers? Overbuilding. Developers poured into Ocala during the post-pandemic housing frenzy, drawn by cheap land and booming interest. But many overestimated demand. Entire subdivisions in places like Silver Spring Shores are now ghost neighborhoods with for sale signs dotting every block. And let's talk about affordability. Ironically, it's become unaffordable for locals. Home prices went up over 55% between 2020 and 2023, pricing out first-time buyers and renters alike. Combine that with rising insurance premiums, which have doubled for many thanks to statewide insurer pullouts, and buyers are simply saying, no thanks. Then there's employment. Ocala relies heavily on manufacturing, warehousing, and agriculture. But job growth slowed in 2024, and wages haven't kept up with the housing boom. The average salary here is around $47,000, while the median home price is over $270,000, a ratio that's getting way out of whack. So while Ocala still has horse trails, rolling hills, and small-town charm, its housing market in 2025 is stumbling from oversupply, affordability pressures, and a shrinking buyer pool. Number 7. Tampa, Florida. Tampa, a city that's been one of Florida's real estate darlings. Until now. In 2025, Tampa is facing a harsh market reality check. Just 2 years ago, buyers were practically battling it out on front lawns. But now, the vibe has totally changed. Housing inventory in Tampa has surged past 5,400 active listings, up from just under 3,000 in early 2023. That's an eye-popping 80% jump in just 24 months. Why the spike? For one, builders went a little wild. New condos, subdivisions, and high-rise towers popped up all over the city. That construction boom collided with rising interest rates, now hovering around 6.8%, pricing out a ton of potential buyers. Monthly mortgage payments that were around $1,800 are now pushing close to $2,600 for the same house. Add to that, Tampa's home prices are correcting after years of overvaluation. Zillow data shows a 0.3% decline month over month, but here's the kicker. Investors are panic selling. Reports from local realtors reveal many are unloading homes at 5 to 10% below what they paid in 2023. Even long-term landlords are backing off because property taxes and insurance premiums have climbed over 40% in just 2 years. And don't forget Tampa's hurricane exposure. After a string of storms and a tightening insurance market, some carriers have exited the state altogether, making it harder and more expensive to insure properties. A single-family home near the bay that once cost $2,500 a year to insure now averages over $5,200. The result? Buyers are cautious, sellers are nervous, and homes are sitting longer. on average 44 days on market, up from just 18 days in early 2023. For a city once hailed as Florida's real estate powerhouse, 2025 is bringing a not-so-sunny outlook. Where sunshine and southern charm meet a real estate market on shaky legs. At first glance, you might not expect Florida's largest city by area to be struggling. But look closer, and the cracks are impossible to ignore. In 2025, Jacksonville's housing inventory has ballooned to nearly 4,000 active listings, the highest it's been in over a decade. That's a massive leap from the 2,200 homes on the market in early 2023. The root of the problem? Overbuilding and overpricing. Builders pushed hard in suburbs like Orange Park and Middleburg, but demand just hasn't kept up. Many buyers were priced out when interest rates jumped to nearly 7%, making $300,000 homes suddenly feel like $450,000 with today's financing costs. Combine that with 26% overvaluation, according to Fitch Ratings, and it's clear Jacksonville was due for a correction. Also, the area has seen an influx of job losses in the logistics and shipping sectors. Jacksport's freight volumes dropped by 14% year over year, causing ripple effects in employment and income. With fewer buyers qualifying for mortgages, homes are staying on the market longer, averaging 51 days compared to just 21 back in 2022. Another issue? Insurance rates. Florida's insurance crisis hasn't spared Jacksonville. Premiums for flood-prone neighborhoods have risen by 60%, driving up overall homeownership costs and scaring off first-time buyers. Even long-time residents are downsizing or relocating to lower-cost inland towns. The icing on the cake? Investor retreat. Big national firms that once scooped up homes here for rentals are now dumping inventory. Data shows that nearly 1 in 5 homes on the market in Jacksonville is investor-owned, and many are priced to sell fast. So while Jacksonville might still have great golf courses and river views, its housing market in 2025 is looking less like a sure bet and more like a waiting game. Known for its white sand beaches, art scene, and retirees in linen pants sipping cocktails by the marina. But behind the palm-fringed perfection, Sarasota is dealing with a real estate hangover in 2025. This once red-hot luxury market has started cooling fast, and the stats are louder than the seagulls on Siesta Key. Let's start with inventory. Sarasota's housing stock has soared to levels not seen since 2015, with over 3,700 homes listed for sale, compared to just 1,800 2 years ago. That's more than double, and it's putting serious pressure on prices. Homes that were once fetching $1.2 million are now struggling to move at $975,000. Ouch. Why the slowdown? First, Sarasota's market got a bit too hot for its own good. It was labeled one of the most overvalued metros in Florida. Zillow estimates show it peaked at 38% over fair market value in 2022. That balloon had to pop eventually. Now, with buyers tightening wallets and mortgage rates topping 6.75%, the luxury home crowd is getting pickier or disappearing altogether. Also, Sarasota relies heavily on out-of-state buyers and retirees. But with inflation still lingering and stock portfolios taking a hit in 2024, fewer boomers are cashing out big. Plus, the insurance crisis is biting here too. Waterfront homes have seen policy premiums climb to $8,000 to $10,000 a year, making second homes a lot less dreamy. And finally, let's talk market timing. Homes are now sitting for 91 days on average, up from just 32 in 2022. Realtors are cutting prices, offering credits, and even staging open houses with wine and charcuterie to lure buyers. It's a shift from a seller's paradise to a buyer's market, if buyers are willing to take the plunge. So yes, Sarasota is still stunning, but in 2025, that picture-perfect lifestyle comes with market turbulence. Number 4. Port St. Lucie, Florida. Port St. Lucie, and let me just say, it's one of the most dramatic housing stories in all of Florida right now. In 2025, this once affordable coastal paradise has turned into one of the most overvalued housing markets in the state, and reality is finally catching up. Let's talk about that overvaluation first. According to data from Florida Atlantic University, Port St. Lucie's homes are priced at 41% above their long-term value. That's not just a bubble. That's a balloon waiting to pop. Back in 2022, the median home price soared to over $410,000, while the average household income here is just around $62,000. That's a huge affordability gap. But it gets trickier. Inventory is up 35% year over year, with new developments still hitting the market even as demand is cooling. A big chunk of buyers during the boom were from out of state, especially from New York and New Jersey, looking for sunny escapes. But as economic uncertainties grow, those buyers are disappearing, and so are their offers. Builders in Port St. Lucie are now slashing prices. In some newer communities, you'll find homes that were listed for $430,000 in 2023 now reduced to $360,000 or less. Even worse, sellers are throwing in incentives like closing cost credits, upgraded appliances, and reduced interest rate packages to attract attention. Another concern? Infrastructure. Port St. Lucie grew fast, too fast. Schools are overcrowded, traffic is worsening, and water utilities are under pressure. That's starting to spook would-be residents who once thought this city was Florida's best-kept secret. And just like the rest of Florida, insurance premiums have gone through the roof. Waterfront homes now average $6,500 plus annually, adding to the total cost burden. In 2025, Port St. Lucie is learning that what goes up must come down. And while it's still got great golf courses and nearby beaches, the housing market is headed for a pretty steep correction. Number 3. Fort Myers, Florida. Fort Myers, your turn. And wow, what a roller coaster ride it's been. Just a couple of years ago, this vibrant Gulf Coast city was leading the pack in Florida's housing boom. But in 2025, Fort Myers is pumping the brakes hard, and the housing market here is officially in correction mode. First, some context. Fort Myers was one of the fastest growing metros in the entire US from 2022 to 2024. Home prices jumped by more than 65% in just 24 months, with median values peaking around $430,000. But when growth moves that fast, a pullback is almost inevitable, and now it's here. Prices have dropped around 6% year over year, and sellers are getting anxious. Inventory has exploded. In 2023, there were about 3,200 homes for sale. Now, we're looking at over 5,000 listings, and they're sitting much longer, up to 60 days or more on average. That means more competition, more price cuts, and more homes falling out of contract. Why the stall? Fort Myers was heavily targeted by out-of-state investors and snowbirds. But the economic slowdown, rising interest rates, and insurance nightmares have scared many away. After Hurricane Ian, insurance premiums in Fort Myers spiked dramatically. Average annual costs now hover around $9,000 to $11,000 per home, even in non-flood zones. There's also a tourism dip. Hotel bookings are down, snowbird traffic has thinned, and vacation rental revenue is shrinking. That's putting pressure on Airbnb property owners, many of whom are now listing their homes at discounts just to exit the game. And let's not forget affordability. While the median household income here is under $60,000, home prices are still too high for many local buyers. That affordability gap is stalling demand, especially for younger families and first-time homeowners. In 2025, Fort Myers is a case study in how fast growth can turn into fast trouble. It's still got charm, beaches, and sunshine, but the real estate market, it's taking a serious breather. Number 2, St. Petersburg, Florida. St. Petersburg, known for its artsy vibe, stunning waterfront parks, and colorful murals, is now facing a not-so-pretty picture in the housing market. In 2025, this Pinellas County gem is officially in correction territory, and the numbers are loud and clear. First, the housing inventory has absolutely ballooned. There are now over 5,600 homes on the market, the highest in nearly 8 years. That's up from about 2,800 listings in 2023. More listings mean more competition, and sellers are starting to panic. Price reductions have become the norm. Nearly 1 in 4 homes listed in spring 2025 has been discounted. The median home price peaked at around $450,000 in 2024, but now homes are being listed closer to $390,000, and they're still sitting. According to Redfin, the average time on the market is now 48 days, compared to just 17 days during the boom. What's behind the dip? First Street. Pete's luxury and vacation markets were red-hot with investor activity during the pandemic. But now that mortgage rates hover near 7%, many buyers have cooled off. And those who bought at the top are underwater, especially Airbnb hosts who are now competing in an oversaturated rental market. Insurance is another beast here. Being close to Tampa Bay, St. Pete faces high flood risks, and premiums have jumped by 60 to 70% since 2023. Some waterfront homes are now costing $10,000 plus per year in total insurance costs. And don't overlook affordability. The city's median household income is just under $58,000, which simply doesn't line up with housing costs anymore. Even with remote workers moving in, local demand has softened, and many longtime residents are moving to more affordable nearby towns like Largo or Clearwater. So, while St. Pete still dazzles with sunshine and a strong culture scene, its real estate market is feeling the squeeze. The overgrowth, high costs, and shifting investor confidence are turning what was once a seller's paradise into a buyer's game. Number 1. Lakeland, Florida. Lakeland, nestled right between Tampa and Orlando, has officially claimed the top spot as Florida's most vulnerable housing market in 2025. It's not just slowing down here. It's sliding fast. This mid-sized city went from boomtown to bustville in less than 3 years, and now the cracks are showing big time. Lakeland's housing inventory has jumped from around 3,000 listings in 2023 to a whopping 4,800 in 2025, a 60% increase. That's a massive oversupply for a city that's only got about 115,000 residents. More homes on the market means more price cuts, more stagnation, and more frustrated sellers. Home values that soared to nearly $350,000 in 2023 have begun sliding. Recent data shows a 2 to 4% drop month over month, and many properties are being relisted below their appraised value. According to Zillow, homes now average 53 days on market, more than double from the boom period. But what caused Lakeland's tumble? First, overbuilding. The city saw a frenzy of suburban development, especially in South Lakeland and North Polk County. Builders flooded the market, but demand couldn't keep up, especially with mortgage rates nearing 7%. And here's the kicker. Lakeland was a top target for investors in 2021 to 2023, thanks to its affordable tag. But now those investors are backing out or panic selling. A shocking 31% of current listings in Lakeland are investor-owned, and many are slashing prices just to get out. Insurance premiums haven't spared Lakeland either. While not as high as coastal cities, rates have risen by over 40%, and basic coverage for a single-family home can now cost $4,000 to $5,500 annually. To top it off, job growth has slowed. Lakeland relies heavily on logistics, especially warehouses and trucking, but those sectors have been hit by national freight slowdowns. That means fewer people relocating and more locals staying put. Lakeland had its moment in the sun, but in 2025, it's grappling with the perfect storm of overbuilding, investor retreat, and economic headwinds. For now, it's the poster child of Florida's housing correction.